Good evening, everyone. I hope I'm visible and audible to all of you. May I get a quick confirmation over the YouTube live chat box? Yes. Am I audible to all of you? A quick confirmation before we start. Yes, this will be uploaded after the session. This is a YouTube live. As soon as it gets over, it is made available in the live section of my YouTube channel. Yes. Awesome, awesome. So I hope everyone is doing really well. Welcome you all to the March 2025 AAA Grand Revision. So you guys have your exam this Monday, and I'm sure you guys are well prepared for it and you're ready to face it. But yes, there's a little confidence booster that everyone requires. And of course, we'll talk about the aspects of time management, the way the exam has to be done on the day of the paper, but we will also revise certain theoretical areas and certain exam answer writing techniques which will help you to combat this challenging paper which is having very less pass percentage. So I'm sure by far you guys must have heard from a lot of your friends who already done AAA that this is a very terrible paper with a very less pass percentage. So already all that stuff is there in your head. Plus, when we were doing the syllabus, this paper seemed very easy. But now, when we are actually into the practice part and application part, it has turned the tables. It has totally been reversed, right? So I know this has been happening, and all are going through the same thing. But we will make sure that we make best out of the time you are here on this session, and I will give you the strategy for the forward days as well. But before that, let's do some theory questions. Let's see what are the direct theory questions. And I would also request, if you guys are here from any, like you're not from the paid groups, you're not from the paid batches, I mean, you're not enrolled students, so you can share this YouTube link with the students who are preparing for AAA, because of course, let's share helpful resources as much as possible, right? So this is all for AAA students. I'm not just going to talk about general ISAs in this particular session, but I'm also going to talk about exam techniques, which are very important for your attempt of advanced audit and assurance. So let's get started. I hope we have a good attendance here. So just throughout the session, I want the zeal. I want you guys to respond in yes, no, whatever I say. Okay. So before I start, are you guys ready? Are we ready? Yes. That keeps the momentum of the session, that keeps up the energy. Are we guys ready to start the session and make sure we pass AAA in March 2025? Even if it's your first attempt, second, third, fourth, let's make it the last attempt for AAA. Okay, awesome, awesome. That's the energy I wanted. So let's get started, guys. I would share my screen with you now. And when I share my screen, the camera is not available. So let's see what's here. Okay. Yep. Yes. This is this is a Word file that I'm going to make today in this session, and I will be sharing this Word file with you after the class in the description box and in the free WhatsApp groups, which you guys are already part of. And the students who are enrolled with us, you'll find it on your portal. Okay. So let's see what we have here. The AAA Grand Revision. Let's give the heading AAA Grand Revision. March 2025. I would first talk about the format of the paper. I'm sure you guys have known the format, but let's talk about it strategically, right? That what all things are we supposed to do? So, in the format of the paper, the question number one is worth 50 marks, right? Now, 50 marks means how much time I should allocate to this 50 marker. Now, if you think 50 marks would mean that I am giving 1.8 minutes per mark. Now, in this 50 marks, already the 20 professional marks, all these stuff are included. So I would just say that I am giving 1.8 minutes per mark. Okay. So this is for 50 marks. So you can calculate for yourself that how much time are you supposed to allocate. So how much time are we supposed to allocate? 1.8 into 50 marks, that is 90 minutes. Now, 90 minutes would mean I am supposed to allocate approximately half of my time. That is 1 hour and 30 minutes. So 1 hour and 30 minutes is a huge deal of marks, isn't it? Huge deal of time that I'm dedicating to just question number one. Now, ma'am, this question number one can come from various areas. Number one, you can find a requirement related to business risk. That is something that I believe is the easiest requirement that any paper could have. Because here we are just talking about, okay, here we are just talking about the, you can say, what risks the business is facing. So we are having a lens of a CEO or we are having a lens of a CFO, just like you used to have in SBL. So this part of business risk, okay, this is overlapping with strategic business leader paper. Because here we are talking about what all bad things in the simplest language can happen to a business. Correct? Now, this is something which you get to know by looking at their ratios, like liquidity ratios, current ratio, their quick asset test ratio, their interest cover ratio, what is their gearing ratio. So all these ratios you're looking at, and then you're talking about whether they will be bankrupt in the future or what is their risk regarding going concern. So this is basically what I have in my business risk requirement, right? And this is, if I say for every single heading that I put, okay, I get 2 marks for that. So if I make 1 point, for example, in business risk, let's suppose the issue is related to a capital expenditure, okay, capex that you're going to make. And now the risk is that this is going to be a cash drain to you. I'm writing in short form. Plus, what if this capital expenditure does not lead to inflow of resources? Because usually whenever you create an asset or whenever you capitalize something, you do it with a probability or you do it with certain expectation that yes, money will inflow. Now, what if the money does not inflow? Because that capital expenditure is a waste. That is why we say it is a business risk. Plus, it will be a cash drain to you. It will be a huge setback to your bank account. So, yes, this is a business risk. So, just stating the heading of it and giving its explanation that why it is a business risk gives you 2 marks. So, if you get a requirement worth of 8 marks for evaluating the business risk, how many points are you going to write? You're going to write 4 points in this requirement. Correct? That is what we have for our business risk topic. Have we understood the way we are supposed to write it? Can I get a quick yes in the chat box? Are we there? Yes. Are we clear on the business risk point? Yes or no? Quickly in the chat box. I'm waiting for your yes or no. Are we guys clear on this? Awesome, awesome. That's great. Okay, let's move on. Let's move on. Now, the second type of requirement that can be there, I hope you've seen the very recent past papers where they've started asking you by giving you a certain ROMM and asking you why it is a risk. For example, why inventories valuation is a risk of material misstatement, maybe for 6 marks. Oh my god. So this is something that they started asking. Previously they were asking you evaluate and prioritize the audit risk or ROMM. Now they've started asking you or giving you the risk already and asking why it is a risk. Now that is something that we are supposed to very diligently cater to. So what are we supposed to do in this? Is our flow different? Is our technique different? No. I'm supposed to follow the same technique of MTR. Okay. So what is this MTR technique? Here I talk about my materiality. Okay. Now, you know, in risk questions, they already give you that your materiality is either based on revenue, profit, or total asset. So you have to tell them whether you've kept it on the lower side or the higher side, right? Based upon the risk of that client. Now, as an auditor, I am supposed to identify what is the risk of my client, right? So that can be based upon multiple factors that I would discuss with you. But yes, what is your technique of writing risk questions? You'll first talk about whether that particular account balance, transaction, or disclosure is material. Second thing, you'll talk about its treatment. But ma'am, from where do we get to know the treatment? That is nothing else but your IFRSs, right? So these IFRSs are to be mentioned as it is. Okay, so let's suppose there's a risk related to IFRS 9. So you will mention what accounting treatment is there for IFRS 9, right? So there can be a risk related to IFRS 3. So you'll mention what is the accounting treatment of IFRS 3 as it is, directly, no application. Gives you easy marks. And then you'll talk about the risk in that situation. What is the risk? What is understated? What or which account balance exactly is under/overstated? This is what I'm supposed to mention in my MTR. That's how you conclude your risk question, right? That is the strategy to follow for audit risk and risk of material misstatement. Now, ma'am, if I'm doing a risk question, I'm supposed to give a heading. Okay, so I identify a risk, then I do MTR analysis of it. Now, there are certain situations, guys, where you might have to give more than one treatment related to that one heading only. So, for example, okay, you've done a lot of questions. I'm sure you will be able to resonate to it. Let's suppose in the question, in the case study, what they have written. Let's suppose in the case study, they have written that there was a CGU. There was a CGU which was identified, and it was, we were looking at its impairment, and then we were trying to also sell it in next 12 months. Now, in this case, you can give a heading, okay? You'll give a heading of CGU, of that particular CGU. Then underneath that, you will discuss the materiality of that CGU as a whole. Then you'll talk about its treatment. So in treatment, first of all, you would refer to what do you mean by a CGU under IS 36 and whether it was correct to recognize that particular thing as a CGU. Then again, you can refer about its impairment allocation. Now that is a separate treatment. So talking about IS 36, what is a CGU gives you 1 mark. Then talking about its allocation of impairment to a CGU gives you another 1 mark. And then talking about that you're supposed to sell it in next 12 months and referring to IFRS 5 for discontinued operations, right? And for the assets held for sale, that will give you another 1 mark. And then finally, you talk about a cumulative risk. What is there? Due to all these areas that we have discussed. Maybe they have misclassified it as a CGU. Maybe they have improperly allocated the allocation, or maybe they have not calculated the impairment at all. And maybe they have not classified the CGU correctly as per IFRS 5. And then they've not done the accounting treatment as per IFRS 5. So this is a way of extending your answers. So with one heading, it's not necessary that you're just getting 3 marks. In such a situation, with one heading, you're getting 1 mark for materiality. For treatment, you're getting 1 for mentioning about CGU. So 1 for impairment, 1 for IFRS 5, and 1 about IFRS 5's accounting treatment. So 1, 2, 3, 4. 4 marks for treatment. Then you're mentioning the risks also. Now they will be also different. So around 2 marks for that. So approximately you're getting 2 plus 4 plus 1, 7. 7 marks from one heading. And that's why you would see that some questions where they ask you about, for 16 or 18 marks, when they ask you about risks, there are only 5 to 6 headings given, or just 5 or 4 headings given. Because there are certain headings in between which are having more than 3 marks. So I hope we understand that risk does not mean per heading I'm getting 3 marks. Risk might also lead to more than 3 marks, which can go up to 7 marks. Are we clear on this? Yes or no? I want a proper answer from all of you. Are we guys clear on this? Yes or no? Because this is very important. So it's not necessary that MTR will give me 3 marks only. It is also possible that I can get up to 7 marks per heading. So I have to dedicatedly allocate. Okay, if the question is worth 12 marks, it's clear. I would write 4 headings, 3 marks each. Then I will not expand my points. But if I have lack of ideas, 1 point can be expanded if it is relevant to that particular case study. If you can expand and talk about various treatments. Yes, we all clear on this? Awesome, awesome. So this is basically our audit risk and ROMM strategy. Now, what other kinds of question can be there in our question number 1? Let us discuss that as well. Okay, so another sort of question that you can find in your this question number 1 is third one: evaluate and prioritize the audit risk. Yes, evaluate and prioritize the audit risk. Now here, what are we supposed to do? How are we supposed to prioritize the audit risk? Evaluation, we all know MTR. But how will we prioritize? So let's discuss this. On what basis are audit risks prioritized? So on what basis are the audit risks prioritized? Okay. Let's go on. Let's discuss this. Okay, Jasleen is saying examiner report maximum 3 marks. Yes, somewhere when there is no point of expansion, let's suppose you've talked about impairment separately. You didn't give the heading CGU, but you gave the heading impairment of CGU. So within that, you cannot talk about IFRS 5. You're getting my point? So if you gave the heading of impairment of CGU, you cannot talk about IFRS 5 there. Then you'll have to make another heading which will say CGU held for sale. So that will give you another 3 marks. So for impairment of CGU, 3 marks, for 3 marks for the disposal of CGU. So I'm saying you might club these points as well, right? So that's what is the difference, Jasleen. On what basis are audit risks prioritized? First of all, we base our audit risk, which is particularly related to intention. Let's talk about this in detail. What is intention? Now, as our auditor, what we are supposed to see in the client, whether they're true and fair or not, right? That's what I want to figure out. Are these people truthful? Are they not lying? Are they good people or not? Now, if their intention is bad, for example, they're involved in management bias. Yeah, they're involved in management bias. I will be very skeptical. This will lead to professional skepticism. And here, I would point this out first because this is related to intention. You would see that if there is a management bias in that particular question, we always use this point in almost every point of audit risk. So for example, there is a management bias in this question because the management wants that the debt covenants should not be breached, are not breached. And for that, they want to maintain the current ratio above 2:1. Yeah. This is the, let's suppose, a hypothetical scenario that they should keep the current ratio above 2:1, and to maintain that, they are biased. So they might have done few errors of classification between current and non-current liabilities. They might have intentionally tried that the current liabilities are not overstated or they are not recorded well. They might have misclassified between current and non-current liabilities. Now, this point can be used further in other points also. So this management bias is a very highly prioritized point that you have to mention. Then, for example, your client is a new client, and that question talks about audit risk and not ROMM. So here again, you can mention that this leads to detection risk because detection risk is faced by the auditor, right? This is not a risk of the client or the control risk or the inherent risk. This is a risk which the auditor faces. So that again becomes very important for you. So you have to prioritize it, because you are supposed to work on it so that you're able to find other areas of risk as well, right? Then another priority of yours should be to a very highly material risk of material misstatement. Okay, so something which is, let's suppose, related to corporate governance. Okay, something which is related to big uh, drawbacks in the client, corporate governance, or something related to their non-compliance. Yeah, so non-compliance is also something which is very material. Now you might ask me that, ma'am, why are you saying it is very material? Because it is material by nature. Material by quantification still can take time because it is visible to everyone, but our priority should be to something which is material by nature, something which is showing the intention, something which is showing wider picture. So if I say that there is a risk that impairment is calculated wrong, maybe the impairment is having a very big material amount, whereas I'm saying that they're not complying with laws and regulations, what thing will you cater to first in real life scenario? Your impairment calculation or your non-compliance? Of course, non-compliance, right? That's a bigger point, which impacts a lot of stuff in the financial statements. Impairment is just sticking to just one account balance, right? So I would refer to non-compliance first. Then if I talk about corporate governance, again, this corporate governance is widespread. This is something which will impact a lot of stuff there. If you have weak corporate governance, you will have weak controls. There will be risk of material misstatements in all the other transactions and account balances. So it's a wider coverage as compared to one risk of one account balance. Then finally, I will give priority to other risks based upon their quantification or based upon their materiality, right? So now I will base my calculations on materiality, and I would analyze my audit risks. And a very, I would say, yeah, and a very easy way to identify is something in the question. Now it's a cheat code for you. The cheat code, in the exam, something which is quite, I would say, basic to understand. The cheat code is that if in the paper they have written paras about one single transaction, one single transaction or account balance, we will prioritize it. So that means they themselves think that is a high risk thing. So if you're not applying your judgment, maybe you are thinking by yourself, and you don't want any judgment. You are not confident about your judgment. So you're like, okay, I want some cheat code, what to prioritize, something about which they've written paras apart from these things that I've already told you. Something which is related to an account balance. Maybe it could be related to redundancy. Sometimes they write long stuff about redundancy, so that can be prioritized. Somewhere they have given you a set of financial statements, so that is given for analytical procedures. So they've covered a wide part of your exhibit in that. So that is basically becoming important for you. So examiner is very particular about what they write in exhibits and what they make for the question paper. They have limited words for making your question paper. So whatever they've given extra weightage, they clearly want you to tackle it first, right? So we have to keep it as a cheat code that anything which is there materially in the paper, I would first talk about that. That's how I will prioritize my audit risk. Are we guys clear on this? Yes. Compliance risk can also be treated as a risk. Yes, of course. It will lead to, fines and penalties in future and maybe affect on going concern. So a disclosure. Okay, awesome. So I hope we all are clear till here. Let's move on and let us discuss. So we've discussed business risk by far, right? The type of requirement that can be there in your question number 1. Then we've discussed why a particular thing is ROMM and how to go about it. Then we have discussed evaluate and prioritize the audit risk. So evaluation, I've talked about MTR, but on what basis are you supposed to prioritize? I've given you that. Okay. Now, let's go on and talk about rest of the stuff, which can be there in the question number 1. So you can also find the fourth element, which can be related to audit procedures or evidence. Now the question comes, ma'am, how to write good procedure or good evidence? So let's talk about this, okay? Now, a good procedure so first of all, what exactly is a procedure? As an auditor, okay, you're supposed to do some work. Why are you appointed? Let me discuss with you one-on-one. Let's talk about it. I hope I'm visible to you. So what exactly are you supposed to do as an auditor? As an auditor, you are supposed to do certain work on the financial statements of your client, because that's why you are recruited, and you're supposed to ascertain whether the financial statements are true and fair or not. And then you're supposed to finally give a conclusion that yes, this is true or fair, and or no, this is not true and fair, or it is true and fair, but apart from this one transaction. So there are different kinds of opinions that you give as an auditor. So you are supposed to do certain work and then decide whether it is true and fair or not. So it's not going to be on prediction. It's not going to be on tarot card, like you just throw a card and find whether it's true and fair or not. So you are, of course, supposed to do certain work on it. Now, if you're supposed to do the work, you're also supposed to collect evidence. Because whenever we work as an auditor, you need to understand there is a certain liability on us. It's not just for this year. For the upcoming 5 years, we can be sued for something that we did 5 years ago. They can say you were negligent in your work. So I need to maintain a proper documentation that this is the work that I did, and that's why I gave this conclusion. Because whenever I give a conclusion, I'm signing the audit report. I'm giving that as a guarantee that yes, that's what I believe. Okay. Like you're giving a reasonable assurance, but in a form of signed report. So whenever you put your signatures there, you have a liability attached. So for that, you're supposed to maintain certain evidence of your work. Now, if you're supposed to maintain the evidence, so you're supposed to collect the evidence. That's also part of your job now. So first part is to do work to ascertain whether it is true and fair or not. Second part is to collect evidence. Now, this evidence that you collect, as per the ISAs, the standards on auditing, we say it should be sufficient and appropriate. When I say sufficient and appropriate, your question should be what is the meaning of sufficiency and what is the meaning of appropriateness? Sufficiency means that you've collected a good quantity of evidences regarding one risk, and appropriateness means that it is relevant evidence. Okay, so let's suppose you want to collect an evidence whether the client's PP is correctly calculated. So for that, what do you need? You need its cost of acquisition. So for the PP's cost of acquisition, you can find the ownership documents to know what was the cost of acquisition. Then that is something which will be a good evidence. Then secondly, you can talk about like their calculations of depreciation, or you can see the schedule of the revaluation calculations. That could be an evidence. Now, the point is, can I write anything which is irrelevant to the acquisition of PP or which is not related to PP as an evidence for the valuation of PP? No, that would become inappropriate. Can I say company's license is the evidence for PP's acquisition? Of course, you can't. So you have to make sure that what you're collecting as an evidence is appropriate. It is a good quality evidence. Now, good quality evidence, another aspect of it. Anyone who wants to rely on something, they would always want, okay, they would always want that this evidence is coming from an outside party, from a third party. So I am not willing to get any evidence, okay, I'm not willing to get any evidence which is internally generated. I would not rely on it as much as I would rely on an evidence getting from the third party, which can be from a valuer, which can be from a lawyer, which can be from an actuary, anyone. So it is a third party evidence which I rely on more. right? Because I'm doubting the management's intention. That's why I was appointed as an auditor. So I cannot simply rely on what management is saying. So if the thief says, no, I'm not stolen something, you would not rely on them. You would want some kind of an external evidence. So something which is sufficient and something which is appropriate is a good audit evidence. Correct? Now, how to write audit procedures and how to write audit evidence. So for that, I need a direction as an auditor in reality also. So financial statements have a lot of account balances, a lot of transactions, a lot of disclosures. So about that transaction or disclosure, what exactly are you testing? Yeah. What exactly are you testing? That's what you have to decide. So you have to see, okay, if it is a financial statement, if it is a P&L, am I testing its occurrence? Am I testing its the transactions occurrence means whether the income has occurred, whether the expense has occurred or not? Am I testing its classification? Have I correctly classified it as revenue or capital expenditure, or have I correctly classified it as deferred or the current expenditure? So whatever, have you correctly classified it? That's direct versus indirect. So that's something that you're testing. Or you're testing its valuation, the amount of it is correct or not. So, or you're testing its completeness, have you recorded the complete cost or not? So what exactly are you testing? Its accuracy, its presentation. Based on that, you have to write your procedure, right? Similarly for evidence. So that's what I'm going to discuss with you. We call these things as assertions. So based upon your assertions, you base your evidence or your procedure. So what are you checking? What is assertion? Assertion is a promise made by the management. Management has made a promise when they gave us the financial statements. They said it is correctly, calculated, it is true, it is fair, whatever is there in the P&L, it has occurred, it is complete, it is correctly classified, it is accurate, and it is correctly presented. That's what they promised. For balance sheet, they have promised whatever asset and liabilities we have recorded, they exist. Okay, we have the rights and obligations on them, the valuation of them is correct, they are accurate, and they are also complete. So that's what they promise. And as an auditor, I'm checking whether their promises are right or not. And accordingly, I have to make my procedures and evidence. So just imagine the procedure is a different thing, evidence is a different thing, and it's like a dish that you're cooking. Let us see what goes inside this dish. What are the ingredients of making a good procedure? Let's discuss that first. Are we guys ready for the audit procedures discussion? Very important part of your syllabus, can be asked up to, I would say, 10 to 15 marks in the question paper, in the whole paper, related to procedures, and 10 to 15 marks again for your evidences. So that's a very, very important part of your syllabus, right? So are we guys ready for it? Shall we begin? Yes or no? Come on in the chat box. I want interaction with you guys. Are we guys ready for audit procedures? That's great. So I have started sharing my screen with you. I'm getting a lot of questions. Will this be uploaded? Yes, of course, it will be uploaded right after the session, but it's better that you join this live and get done with it. Okay. Now, let's first talk about assertions. What in the world do we mean by assertions? These are promises made by the management. Yes. So what are the promises made by the management for statement of profit and loss? They promise us that the things have occurred. So its occurrence. They promise us regarding its classification. They promise us regarding its cutoff as well, that we have recorded it in the correct year. They promise about its completeness. And then they also promise us about its accuracy, right? So accuracy is a promise, and then presentation is also a promise, which I'm supposed to check, right? which I'm supposed to check as auditor, whether it's true and fair or not. And for SFP, what do they promise? They promise that the assets and liabilities recorded are having the rights and obligation. So if an asset is recorded, you have right over it. If a liability is recorded, you have an obligation for it. So that's the promise. Then they promise its existence. So if there's an asset, it really exists. Then they promise about its valuation. Yes, that it is correctly valued. Okay. Then they also promise about its accuracy. Again, just like before for the P&L item. Valuation is different. Accuracy is different. How, ma'am? Valuation is initial value, fair value, revalued amount, right? Whereas accuracy is depreciation calculation, impairment calculation, all that stuff. Then you can talk about its presentation as well, and completeness. So completeness is something that we look at, and then presentation is also something that they promise. So these are the assertions that we check. Now, while making a good procedure, how a good procedure looks like, or what are the ingredients of a good procedure? First, I have to talk about the verb. Now, what is this verb? Action doing word. So when you talk about audit procedure, as an auditor, what work are you doing? You are discussing it with the management, you are recalculating something, you are reassessing something, you are getting some report, or you are investigating into something, analyzing something. So what work are you exactly doing? So here, what I mean by verb is you can write some basic terms that you can use. So you don't say talk to management, you say discuss with management. You don't say get into the details, you say analyze or investigate. Okay. So you use posh language in AAA to get your professional marks. And in general, also, auditors are supposed to maintain their professional words. So, yes, we will use words like discuss with the management, analyze. Okay. Or we can use the words like investigate. We can use the words like compare. We can use the words like discuss, analyze, investigate, compare. We can talk about recalculation. We can talk about assess. Yes, assess is something that you can do. Give me more words. What can you write in your audit procedures? You can also say obtain certain report from someone or some lawyer or valuer or an external party. You can also talk about the review certain things, like review board minutes. So that is a verb that you do, right? So that's etc. So these are certain words that we can use, okay, in our audit procedures. So verb plus on what thing am I doing it? What is the document, or what is the account balance on which I'm doing it? So if I'm talking about, let's suppose, discuss with the management, what are you discussing? Are you discussing the valuation of something? So maybe discuss with the management about their assumptions for valuing the asset. So you're talking about some topic, right? You're obtaining something. So what are you obtaining? You are reviewing something. What are you reviewing? You are recalculating something. What are you recalculating? Inspect is also something that we can write, right? So the document or the account balance, exactly what is the topic? So that has to be written. So when you talk about verb plus the document slash account balance, this gives me half a mark. Okay. Usually this gives me half marks for writing the verb. Okay. For writing the verb, it gives me plus the document, it gives me half mark only. But one procedure is worth 1 mark, right? One procedure is worth 1 mark. So I'm just getting half mark here. What's the cause? Have I not made a perfect procedure? I am supposed to mention the reason why I am doing this. That will give me another half mark. Why? If you are recalculating something, which assertion are you checking? So if I recalculate depreciation, I am checking its valuation, its accuracy, right? So I am saying recalculate the depreciation of property, plant, and equipment to verify its accuracy. So that would be a perfect procedure to write. So recalculate the depreciation charge of property, plant, and equipment to verify the accuracy. Now, that is something which is a perfect procedure. Let's suppose you're discussing with the management. Discuss with the management regarding their assumption of ascertaining the life of the asset to ensure the reasonableness of the assumptions so as to ensure the accuracy. So what I'm trying to say here, I'm discussing with the management the life of the asset. Why do you need life of the asset? You need the life of the asset for the calculation of depreciation or amortization. So what we are checking at the end of the day, we are checking accuracy. But why are we talking about assumptions? Because we want to see whether the assumptions that they've made are reasonable or not. So basically, that's how you write a good procedure, right? So it has to be altered on the basis of case study, which information is available. So this is something, a good procedure is made with presence of mind, okay? With presence of mind, with technique. This is the technique that I've just told you. Talk about the work, talk about the document, and tell that why are you doing that procedure. Now that gives you 1 mark in total. Now let us come to what do we mean by evidence. So I just told you that audit evidence are supposed to be sufficient. That means its quantity should be sufficient, right? Its quantity should be sufficient. It should be appropriate. That means its quality should be good as well. So quantity and quality both are supposed to be there. Now let us talk about how to make a good evidence and what is the difference between a procedure and an evidence. Pay attention to it. Evidence is something that we write in form of document. Because procedure, let's suppose I will write a corresponding evidence for the procedures that I've written as examples. I said recalculate the depreciation charge of PP to verify the accuracy. What can be the evidence that I did actually recalculate the depreciation? So I can say copy of schedule of depreciation calculations of property, plant, and equipment to ensure the accuracy of the account balance. Yes, so I'm saying this is something which is my evidence. I did a recalculation related to that. I needed evidence. What will be the evidence of it? So if you say, ma'am, I have done practice questions in a typed way, I say, show me the evidence. You will give me the answers that you've written in the Word file, the copy of your answers. So that is what evidence is. And if you have discussed with the management, there can be meeting notes. So copy of meeting notes with the management to ensure the reasonableness of the assumptions. Yes, to further ensure the accuracy of whatever is the account balance, PP. So this is something that we make as an evidence. Sometimes in the question, you would see that in evidences, they don't write the assertion. Now you might wonder, ma'am, in those, they have not written about the assertions. Sometimes for the procedures also, they do not write the assertion. Why? Because there the question is like, write audit procedures for the property, plant, and equipment's accuracy. So they've already mentioned that this is the assertion. So you will not repeat it again and again, right? So when they have not mentioned for which assertion you are making the procedure or for which assertion you're making the evidence, if they have not mentioned it, then you will write the full procedure or the full evidence like I did in front of you. But if they've mentioned in the requirement that what are the procedures for the PP's accuracy, then you will not mention accuracy again and again. Because They have specified that you have to write procedures just for accuracy. So you'll not keep on discussing it again and again, right? So another example of evidence, let's suppose we have physically inspected an asset to check its existence. What will be its evidence? If I physically verified an asset, what would be its evidence? Yes? What would be the evidence of physical inspection? Very good. It will be photographic evidence. Yes. So, what I would do is, if I have done physical verification of a site, I will say photographic evidence of the physical inspection of the asset to verify its accuracy or its existence. Verify its existence. That is what I'm supposed to write as my evidence. Very good. Physical inspection documents or photographic evidence. So that is something that I write for a good procedure and a good evidence. Are we guys clear on this? Yes or no? In the chat box quickly. Do you understand your strategy to write audit procedure and to write audit evidence? That is great. That is great. So how are we? Are we enjoying the session? Yes. Are we all enjoying the session by far? And yes, the recording of this session will be made available right after the class in the YouTube. Okay. Right. Fine. Now, guys, we'll take a break of 5 minutes and then we will restart and we'll now move towards our second question, which will be related to other topics. Okay. So we'll just take a small break of 5 minutes and get back to our grand revision. Yes, guys. So let us resume with our session now. I hope I'm visible and audible to all of you. Okay, that's great. Let us continue with the session. Let's come to question number 2 of your paper. So question number 1, we have briefly discussed what can be there, in the question number 1, business risk, audit risk, ROMM, audit evidence, audit procedures. And of course, there can be some direct theory questions, which we will discuss. But you got to know the essence of question number 1. Now, let us talk about question number 2. So what can be there in question number 2 of my exam? See, usually this question will have something related to quality issues. Okay, this will have number 1 thing that you can find here is quality management. Okay, you can find something related to ethics and professional issues. That can also be there in question number 1, but most probably question number 2 will have all this stuff. Okay, and then you can also have a question related to comment on the matter. Comment on the matter. So you will have to be, talking about the materiality of certain account balance, its treatment, and its impact on the financial statements. So they might ask you comment on the matter or matters to be considered in a particular exhibit. So matters to be considered. So this is what you can find in your question number 2. Now, when I talk about quality management, what is quality management? On this, we have a topic, a full-fledged topic of ISQM1, right? We have a full-fledged topic of ISQM1. So let us discuss what exactly is there in ISQM1 of quality management. So this will help you for the direct question as well as the application-based question. So what is ISQM1? Now we need to know here that why do we need a proper standard on quality management? So you all know that audit is a process which is based upon very huge judgments and assumptions. So we will say that audit as a process is based on judgments, assumptions. Yes, it is based upon judgments, assumptions, and you can say it is based upon your competence, that is knowledge, training, and experience. Therefore, yes, there is a need of professional skepticism to be applied by the auditor. So it is based upon a lot of stuff which is personal, which is relative. So all these qualities or elements which I've just stated, that is your judgment, assumption, skepticism, are relative. Okay, all these are subjective. They vary from person to person. So for that reason, to maintain the audit, so for that reason, to maintain the quality of audit at all times, okay, to maintain the quality of audit at all times, we need a system of quality management. A system on quality management is needed. Now, this system of quality management is termed as ISQM1. Now, what does ISQM1 say? It says there should be a system of quality management or a standard procedures for quality management. The number 1 thing that ISQM1 talks about is firms' risk assessment processes. Firms' risk assessment process. Now, what do I mean here by the firm's risk assessment process? I am talking about when I'm an audit firm and I'm doing audit of my client, I should assess my own risks as well as an audit firm. So suppose you enter into an audit of your client and your audit managers leave the firm, or your audit team falls deficit. So how would you manage that? Okay. So you should not be facing any issue. It's just like you go for your exam, you should take care of your health, so that whatever happens in the exam is an external thing to you, but internally you should be prepared and you should not have any problem which is internally generated. So auditor might have to face some external setbacks. Maybe the information is not available or the client has done frauds or something like that. But internally, the auditor should be strong. So there should not be internal problem in the process of audit. So the auditor must assess his own risks, okay? And he should do this in an ongoing basis. So what are your risks as an audit firm? You have audit partners, there's any upcoming dispute or there's any issue regarding your going concern. If yes, you will not take up any audit assignment from your clients. So that's what you have to understand, and you have to make an assessment of it. That is known as risk assessment process of your own firm. Then the second process is governance and leadership. Okay, so what is governance and leadership? We all know there's a culture in a firm which is tone setting. So if you see, the culture is always set by the governance, by the leaders of that particular company. Okay, so tone at the top, we can say the tone at the top, which is the CEO, the CFO, all these people. How are they actually? The same culture will be there in the team as well. So if the CEO or the CFO of the audit firm, okay, if the CEO or the CFO of the audit firm is focused on money making and not quality, is focused on money making, he's saying money making is greatest of all the things for me, then that particular person is, of course, or that particular company or that audit firm is going to be focused on retention of the clients. For that, they might even bend to their needs. They might even accept their flaws. As an auditor, you're supposed to point out the flaws of your clients and challenge them that, this is the thing that you've incorrectly calculated, and I'm going to give a modified opinion for that. And I'm not going to accept this mistake of yours. So even if the client is begging you, you will not accept their mistake, right? So governance and leadership means that the people at the top of your audit firm should have that mentality that quality matters to us and not the client. The client might go, the client might say that next year I will not, appoint you as the auditor. We are not supposed to please them or favor them. We are supposed to do what is right for our shareholders, for the stakeholders, and what is right ethically and morally. And we're supposed to keep quality over money. So that's what we mean by governance and leadership. Then another thing which ISQM 1 talks about is ethics. What is this ethical part here? So ethics is basically when I'm talking about the all types of people working in my company as an audit firm, whether it is top management, whether it is middle management, or whether it is the executive personnel, right? The persons who are involved in the execution. So top tier, second tier, third tier, whichever tier these employees are from, I should train them for ethics. That means I should teach them that, we are supposed to follow ethical requirements laid out by ACCA, that is International Code of Ethics, IESBA. And sometimes, when we are an international firm, we are supposed to even take our boundaries just not from ACCA, but also to other ethical requirements of that particular country. So we have to be very, conscious of our ethical requirements as auditors. Then we have to talk about fourth stuff is acceptance and continuance of the client. So acceptance procedures, right? And continuance of the client relationships. Continuance of client relationships. So what do I mean by this? Whenever I'm supposed to take any client on board, I have to assess his integrity, his ethics. So basically, whenever you all have done practice management, you've understood that how an auditor will onboard a client, right? So same is here. Whenever you accept any client as an auditor, assess the integrity of the client, okay? Assess the ethics of the client, or if the management of that particular client, there's any case running against them which is very unethical, like something like human trafficking, something like child labor, something like which impacts the society at large, or some association with any money laundering or stuff. So you have to make sure that you've checked their past history as well, right? Then we should also check, if we are accepting someone, do we have the knowledge, training, and experience to cater to that client? It's not always that the client has to be integer and honest and everything. It's also the onus is also on you. Are you a good auditor for them? So you're not just accepting someone just because you're getting money. Okay. So if I don't know something, I should not teach that, right? Similarly, if the auditor does not know certain industry, they should not actually go and do the audit of that industry just for making money. So that's knowledge, training, and experience that you should have as an auditor, right? So another thing we should see is that if we accept this client, will we be able to follow the ethical requirements? Maybe we are already doing certain services or giving them certain non-assurance services already. So will I be able to maintain all my ethics in the given situation? That's what I have to see, right? So this is how you maintain the quality of your audit. Then another thing is engagement performance. While you are performing your audit, okay, so what is engagement performance? Engagement performance is basically that what should you or should not do during the process of audit. How should be your performance in the audit? See, you have to ensure, first of all, that the audit that you're doing is good quality audit. So you have to ensure the quality of audit, correct? That's the first thing. Second thing is, when I say quality of audit has to be ensured, what are you supposed to do? You have to make sure that you have a good direction of your audit. So that's why you have audit planning. You make a planning meeting where the team members are sat down. We explain them about the client to our all audit team members, and then we allocate duties to each team member as engagement partner. And then we decide, okay, what responses we will give to all risky areas of a client's financial statements. So that is why direction of audit is very important. You just can't be clueless and just dive into audit. So direction should be there. Then there should be supervision. What is supervision? Supervision is basically at every stage. It's not just in the first planning or just at the end. Supervision happens at every stage. So if I'm doing planning meeting, I'm giving supervision because the engagement partner will decide what work has to be done, right? So the supervision exists there. Then if we are doing the work, if we are doing the audit work, then also we are doing the supervision, because whenever work is done by our team member, we are supposed to review their work, right? So supervision is there. Then finally, when the evidence is collected, the engagement, you can say, partner reviews the work of the audit manager, then the manager reviews the work of the audit senior, or whatever is the hierarchy. So everyone's work is reviewed by a senior, and finally the highest senior, that is engagement partner, his work is also reviewed by an external quality control reviewer. So supervision is a very important part of audit, because we are all humans, right? So we might have done certain mistakes as an auditor as well, which our supervisor can actually find out. Then consultation. What is consultation? If needed, you should consult with any external parties. You can consult with a valuer, you can consult with any actuary, with any lawyer, with any professional out there which you want to consult. So, yes, that is something. Whenever consultation is required, if you do not know about something, okay, you have to consult it from that particular professional. That's very, very important. Then, second thing is review. Now, what is review? Again, Just like supervision, there is something known as review. Whatever work you have done, you review the work of your team members. That is supervision. Whenever there's an issue, the junior should be able to reach out to the senior. That is supervision. But once the work is completed and we are about to report that work, there comes a stage of review. So before we finally give out the audit opinion, we are supposed to review the whole process of audit that has been done. And this review also includes the external quality control review. So as per ISQM 2, external quality control review for listed companies is mandatory. Okay. So it is very important that everyone should get external quality control reviewer appointed for listed companies. So review is also a very good part of quality management. Then any dispute which arises, we are supposed to resolve that dispute. So resolution of disputes. That's how you maintain a good quality audit, right? So whenever, let's, for example, assume in the case study, how can you apply this to a case study? Let's suppose in the case study, they have written no planning of the audit for XYZ company took place. So there was no planning meeting. Okay. Now, what I understand from it that it is a bad quality audit because planning is very important. So what would be a poor answer? The poor answer to it will be where the student will simply say this is bad quality audit. That's what the student will identify, even though the student is correct that yes, this is a bad quality audit because no planning of the audit took place in the planning stage. A good answer will be very, you can say, diplomatic, good articulation is there, and proper analysis is there. Because let's not forget, we have 20 professional marks. So we cannot just write this is bad quality. We have to make it in a very logical flow. What could be the logical flow then? I would first tell them that what is the importance of planning meeting. So we will say audit planning sets the direction of the audit, of the whole audit, as it sets the scope, direction, or you can say scope, timing, and direction of audit, right? Or you can say it sets the direction of the whole audit as it sets the scope and the timing of the processes and responses to be given, to be done / given by the auditor. Also, it helps to do proper allocation of work to the audit team, and all the team members discuss the risky areas of the financial statements, which helps them to respond better and give and perform substantive procedures. Now, this is what I've written as the importance of planning. Now, I'll say finally, what is the implication because the planning meeting has not happened? We can say, as per ISQM 1, a good quality audit is where there is direction and supervision. But with no planning meeting held, there was lack of these elements, that is direction and supervision. Therefore, it indicates a bad quality audit. which can lead to undetected material misstatements. Write in full form, of course, but I am telling you the way you could have written it. Yes. So that's how you actually make good points. I hope you're understanding what I'm saying. That's how you make good points. So just simply saying no planning meeting is a bad quality audit is not a right way to answer. That does not give you the marks that you could have got if you've written in this way. That's the major reason people fail. They write, non-qualitative answers, or we call them as vague answers. So if you write in this way, you're writing very specific, you're being lengthy, you're being qualitative, you're using good words, and you are also writing what is relevant. Are we guys clear on it? Yes. Can I get a yes or no in the chat box? Will we write bad quality answers, poor quality answers, or good quality answers? Poor or good? Come on. What quality answers are you going to write in the exam? You are not supposed to save your time by writing short answers unless the time is running so far that you cannot cope up with it. Then you'll have to quickly write it. But otherwise, you're supposed to maintain the quality of your answers. Okay. Okay. How many marks will this fetch? This will give you approximately 1.5 marks. Right? Okay. Now, how this is basically how we are supposed to write good quality answers. Now, the next part is, let's discuss if for ISQM1, we have sixth point, which is related to human resources. So that is basically you should have good human resources, good audit team members. So you should have resources in timely manner and with appropriate level of knowledge, training, and experience. So for example, you are using an audit intern to do audit of IFRS 9. Now that is not right, because that intern is not having the KTE, that is knowledge, training, and experience, and he does not suffice for a work which is so complex like IFRS 9. So that is also a bad quality audit as per ISQM 1. Then communication and information. So you should always keep on communicating within the team, right? So communication and information, we are supposed to communicate within the team, and we are supposed to give information to all our team members as well as the TCWG, whatever work is going on. And we should be very quick in our communication. We should do it strategically, not randomly. And we should be very professional in our communication as well. Then monitoring. So whatever quality control measures you are taking, keep on monitoring them, that nobody has actually breached the quality control measures and you are currently able to apply all the measures. So it's a ongoing process and not once in a while. So these are the stuff that you have to remember for your ISQM1. So it is firm's risk assessment process, then leadership, ethics, acceptance procedures, engagement performance, human resources, communications, and monitoring. You can make a small mnemonic out of it to remember it if that helps you. Okay. So you can make your own mnemonic out of whatever thing you have to, learn as it is. Okay. Now that was ISQM1 and the way you're supposed to write the answers when they ask you something in question number 2 or any question related to quality management. Then the second type of question that you can get is ethical and professional issues. Now, in professional issues, quality management is what comes, but ethics is something different. What are ethics? Okay, everyone tell me in the chat box the 5 principles of ethics in IESBA. 5 principles of ethics in IESBA. I'm waiting for your answers in the chat box. Which ethics are you supposed to comply with? Very good. PICOP. Number one, professional behavior. That is basically not bringing disrepute to your profession. Now, you guys tell me, there are certain rules for advertisement. Do you know the rules of advertisement? As an audit firm, you're supposed to advertise yourself since you're doing a business, of course. But there are certain rules of advertisement. Can you tell me the rules of advertisement? I should not advertise something. I should not advertise something which is false, right? So I should not give any false claim. So no false claim. So no lies, basically. Second thing, we should not be disrespectful to others or bring down others, right? So not exaggerating or bringing disrepute to the profession or bringing down others. So for example, you say, I will, you will have to pay less tax if you join us as an audit firm. So that is a false claim. That means you are telling the people that you would help them evade the tax, right? So that is a long, very bad advertisement skill. Then giving false, or bringing discredit to the profession that you are in. So, for example, if you say that ACCA is chartered accountants, you are as an equivalent of chartered accounting. So that means you are saying it is a CA. So the person who's doing it or who's a student, he might not know that, maybe they can trust you that yes, it's a CA, but it is not CA, it is ACCA, it's a certification. CA is a different thing. So it's chartered accountancy. ACCA is Association of Chartered Certified Accountants, okay, not certified chartered accountants. So that is something which you are miscommunicating. So that comes under the false claim stuff. For auditors, it can be save your tax or pay less tax. We are the best auditors in the town. So rest of the auditors, you might be, for example, they've given, you might be, you know, let's suppose they say in their newspaper publication that are you fed up of giving money to your current auditors and still they do nothing or do not help you with rest of the stuff. So let's suppose that kind of advertisement is there, so they're bringing down others, the other auditors. So that is bad. So if you bring disrepute to your profession, that is also against professional behavior. So this advertisement is something which impacts your professional behavior. It's not illegal, but it is unethical. There's a huge difference between something being unethical and something being illegal. Okay. Then we have another principle of ethics, that is integrity. So at all times, guys, as an auditor, we are supposed to maintain our integrity because we are having certain, you can say, liability on us, onus on us. What is the onus? The shareholders have appointed us to keep an eye on the management. So if we will say false things, if we will not be honest, how would we work? Right? So integrity is very important. We have to be straightforward, right? And we are supposed to be honest. So straightforward and honest is what integrity means. Then I have to maintain my confidentiality. Now, what do I mean by confidentiality? Yes, what do I mean by confidentiality? That is basically, not leaking any information that you've got as part of your professional or business relationships. So, not, you can say confidentiality is not leaking any information obtained as part of business slash professional relationship without permission. Without permission. So without prior permission, you cannot leak out any information unless it is required by, what? Required by law, or it is in public interest. So something which is in public interest, you can leak out, or something which is required by law, you can leak out. Otherwise, you cannot. So that is what we mean by confidentiality, right? And whenever we talk about that, when an accountant is facing an ethical threat, we say that, okay, go and talk to TCWG or go and report it to ACCA. So there we always say this might lead to breach of confidentiality because you're talking about your issues with the client, with someone outside the client. So you might seek a legal advice that, can I do this? Like it's okay if I go and talk to ACCA about this. So for that, you might need a legal advice, right? Then we have objectivity. What is this objectivity basically? Let's talk about objectivity. So objectivity is when you are not biased. So when you are very faithful and any very objective or unbiased in your dealings, you're not just talking about one aspect. So for example, certain auditors, they get biased towards the client, or they would accompany them to the meeting with the bank to get a loan. So that you're being biased to your client, right? You're not supposed to do that as an auditor. That's an advocacy threat. So that is a breach of objectivity. Then we have lastly the professional competence. So any auditor who is basically getting appointed for the audit of a client, he should have relevant knowledge, training, and experience to cater to that client. So he should not be someone who does not know that industry but is still doing the work of that industry. So that is professional competence. So there are certain threats, ethical threats that you find in your questions. So you can just note them down. Number one is self-interest threat. So there are certain situations which lead to self-interest threat. So let us talk about certain situations. Okay, so these are not the only situations, but yes, these are something that you can use, and I will tell you the way you have to answer your ethical requirements. Okay, so self-interest threat, let's discuss that, and what situations, famous situations that can lead to self-interest threat. So for example, you have a financial interest. So what is self-interest threat? When your financial interest is vested in a client. So now you have your own interest in that client. So you would actually cater to them and you would like to increase their profitability, right? Then second type of threat that we have is, let's discuss that. We have self-review threat. What is self-review threat? When we check our own work as an auditor. So we might have done the bookkeeping of our client, and then we also become the auditor of our client. So that is self-review. So that's not allowed, right? Then we have familiarity threat. So what is familiarity threat? That you know your client since long. So there's a long or close relationship with the client. So when you have this long or close relationship with the client, that is basically your familiarity threat, right? Then we have intimidation threat. What is intimidation threat? When you are intimidated to, or you're threatened, you have an actual pressure on you, or you are perceiving some pressure. Okay, so you have actual pressure or you're perceiving some pressure, so you're intimidated to do something. So let's suppose they say complete the audit in 3 weeks. Yeah, so that is intimidation. So you are intimidated to do the audit in a time constraint. Or they say we will not appoint you as an auditor in the next term if you do not give an unmodified opinion. So now that is something which is again intimidation threat, right? Then we have another threat which is management threat. What is management threat? Management threat is getting into the shoes of the management. So getting into the shoes of management. So management has different responsibilities for the company, and auditor is just coming for a review and a report. So auditor is not coming for the work. He's not actually executory body. Okay, he's not doing any execution. He's doing not doing business of the client. But if the management is saying that, you help us with the controls, you help us with the advertisement part, you help us with this or that, so that is something which is wrong. That is a management threat, right? So management threat is getting into the shoes of the management, which is the only threat in the history of all the threats which can never be reduced to an acceptably low level. So, whenever a management threat arises, we are supposed to say that it cannot be reduced to a lower level. Okay. Then we have advocacy threat. Now, what is this advocacy threat? Here, basically, what happens is in advocacy threat, we have in advocacy threat a threat of taking sides of our client. So we are promoting the interest of the client. So we promote the interest of the client. We might accompany them to a bank meeting. It becomes our legal responsibility. It if you go to bank meeting with your client, you're basically guaranteeing that our client will repay the loan. So that might give you a legal responsibility as well. So these are the threats that we have. Now, how are you supposed to answer your questions? That's a very important part. So in a case study, whenever you figure out that yes, due to this a threat is arising, so first thing that you have to do is you will have to tell them that, or identify the threat faced. Okay, so first you'll identify that in this situation, let's suppose the auditor has accepted gifts and hospitalities. So first you'll identify that yes, this gives rise to self-interest threat. Second thing that you're going to do is you are supposed to tell them, why do you think it is a threat? Yes, why do you think it is a threat? So if you have accepted gifts and hospitality, why do you think this will hamper the quality, or this will hamper your ethics? You will say, because I have accepted gifts and hospitality, I might become too accepting of clients' mistakes, because my own interest is vested here. So I would try to, actually help them with certain things. So my own interest is vested here. So why it is a threat, that is something that we will write. Then significance of the threat. What is significance of the threat? So let's suppose the threat is faced by an audit junior. So audit junior already has very less powers. So even if he is facing the threat, that's something we can neglect. But if the engagement partner is facing a threat which is very small, that also becomes very significant, because the engagement partner himself is a significant person, right? So that is something that you have to cater to. So third thing is you'll mention about its significance. So that depends upon which person, okay, is facing the threat. So which person is facing the threat, it depends upon size of the transaction that has happened, or the position of that person. Okay, it also depends upon whether the client is listed or unlisted. So these factors will determine the significance of the ethical threat. Then finally, we have to give that how can you reduce this threat with the safeguard. So usually we say do the external quality control review or have separate teams. But just remember that an EQR is done for listed clients anyway. So do not propose an EQR for listed clients. Just write there that anyway EQR for a listed company would be done as per ISQM2. So we're not proposing it, but yeah, that would help us to reduce the ethical threat, right? So you just give safeguards like separate teams are kept, stuff like that. So that's how you answer your ethical questions. Are we guys clear till here? Yes. Are we guys clear till here? All of us? Yes. Any doubts? So basically, in ethics, this is the approach that you have to follow. You have to first analyze the situation and identify the threat. Talk about it. What will be its why it is a threat. So you can explain the definition of the threat there, maybe, and then you have to write the significance of the threat, of course, because that's very important. That who is facing the threat and whether the company is listed or unlisted, and then finally you have to talk about the safeguards. Correct? So that is about the ethics part. Okay. Now, finally, we have question number 2, comment on the matters or matters to be considered. So let us discuss that. Matters to be considered. So if in a requirement, they have given you certain exhibits and the exhibit talks about accounting treatment. Let's suppose they've given you a paragraph on provisions. Then they've given you a paragraph on intangible assets. And then they've given you some kind of paragraph related to debt investments. And they've said matters to be considered. So most probably what is happening in that question is they're talking about accounting treatment of something in the balance sheet and the P&L. Now you're supposed to talk about materiality of that. So let's suppose you are talking about intangibles. So you'll say, what is the account balance? So you'll talk about its materiality. Okay. Then you'll talk about its treatment. What treatment can be there? So if we are talking about intangible assets, we can talk about IS 38. We can talk about certain, stuff like if let's suppose the issue is about life of the asset, so we can mention that as per intangible assets there are two types of assets: definite life, indefinite life. And for the definite life, how do we measure the life of the asset? It's very difficult because again it is based upon assumptions, and intangibles are usually unique assets, so they do not have life. Then for indefinite life assets, we will conduct annual impairment review. So you can just state the treatment and then you can finally see whether this treatment was correctly applied in the case study or not. So you'll comment on it. Like if it is correct, good. But mostly it will not be correct or there is a risk related to it. So you will say that if it is not correct, this will lead to understatement of this, overstatement of this. Now, if you are towards the reporting part, if you are coming to review stage, so let's suppose you are right now in the question, the case study says that you're standing at the end of the audit. So in matters to be considered, you will not just talk about materiality, treatment, and impact. You'll also talk about its impact on audit report. So this misstatement will lead to qualified opinion. This misstatement will lead to adverse opinion. So you'll also mention that if the requirement asks you to do so. So that's the classic example of question number 2, comment on the matters or matters to be considered. Do we guys understand this? Yes. So let us type it in our notes or the Word file. Let's go and type it out. Okay. Let's talk about the third type of requirement that we have, matters to be considered. So here we have to talk about materiality. We have to talk about the treatment as per IFRS. Yes, we have to talk about the treatment, and then we have to talk about its impact. Now, impact can be on the financial statements or the impact can be on the audit report. So if we are in the evidence stage, we are still collecting the evidences, or we are in the planning stage, we'll just mention the impact on financial statements. But if we are in the end stage of the audit, the question might ask you to give the impact on the audit report as well. So if there will be any misstatement, you might have to give the impact on audit report as well. So for example, we're talking about in the exhibit, they've written something about intangible assets. So you'll talk about its materiality. You'll write its related treatment, which you feel is there in the exhibit. So maybe they are considering the life of the asset which was incorrectly estimated. So you'll write the treatment regarding it, and then you'll write the impact. That's more or less same as risk, okay? But if that impact is on audit report because there's a clear misstatement. So let's suppose there's a clear misstatement. You know that this is wrong. In risk questions, you say there's a risk that it might be wrong. But what if you find a misstatement? Then you will tell them the impact on audit report, that this will lead to modified opinion, or which kind of opinion, qualified, adverse, disclaimer. So you can mention all of that. So that basically is what we do in matters to be considered, right? And one last thing that I forgot to tell you from the ethics part is that which services, non-assurance services, are disallowed. So that is something which we guys get troubled with a lot. So in listed companies, anything that is related to financial statements, okay, whether it is internal control on financial statements, whether it is bookkeeping, okay, or whether it is something relating to accounts, okay, like calculation of taxes, etc. So, or valuations of something, whatever it is, okay, you are supposed to simply say that this is disallowed for listed companies. It is disallowed by the court. So anything which is related to financial reporting, whether it is internal control, you cannot give any service regarding it as auditors. You cannot give any calculation services of taxation, etc. Or anything which is material, you cannot value it. So this is disallowed under the code of ethics. For unlisted companies, you can provide any kind of non-assurance services with safeguards, right? So that is allowed. So as auditors of unlisted company, you can give rest of the services as well, but with safeguards. So this is something that you have to actually keep in mind for question number 2. So with this, we have covered the concept of quality management, ethics, okay, and how to deal with the questions which are matters to be considered. For that, basically, you should be good in knowing the accounting treatment. So this accounting treatment, we have a session on SBR tomorrow. Yeah. So there's a grand revision of SBR tomorrow, or there are a lot of grand revisions of SBR which are already uploaded on the YouTube. You can watch it. So you guys can actually attend it to know the treatment of your IFRSs or your account balances, right? So this is something you have to keep in mind. Okay. Are we all clear till here? Yes. I want a quick yes or no in the chat box. Are we still high on energy, or we are already falling asleep? Yeah. Till now, we are done with question number 2, and we are just supposed to discuss question number 3 and then some direct theory questions. So, are we guys clear till here? We've done a lot of important concepts by far, and the strategy. And in audit, it's the strategy which makes all the difference. It is not the concept. Concept everyone knows. It's the strategy. It's not just that you know something and you can write it as it is. It's like how you write, the technique, right? Okay. Now let's come to question number 3. What all stuff can be asked in question number 3? So usually, okay, I'm not saying that this is what's going to come up, but usually in question number 3, we are asked about other assignments. Yeah, you know other assignments? Now these other assignments can be cash flow forecast, it can be related to review engagement, it can be due diligence, it can be forensic or fraud investigation. Any other assignment can be asked. So you should be really good in all the other assignments, okay? So if I'll just give you a brief of what all other assignments have. You can see in other assignments, we basically talk about the, cash flow forecast. So cash flow forecast is based upon predictions, right? You are forecasting the future. So they might ask you that what are the going concern problems this company is facing. So using the cash flow forecast, you will identify the going concern problems. They might ask you, okay, let me just type it. What going concern problems? Going concern problems is the entity facing? That could be one of the questions. Then the second question you can also say is, for example, they might ask you what procedures can you perform to see whether the cash flow forecast is correct or not. So same procedures will be performed as you do in audit. But in audit, you go for substantive procedures. Here, you will have very limited procedures. You can inspect, you can review, you can analyze. You don't actually go for physical inspection or recalculation and stuff. So in cash flow forecast, you usually just inquire stuff. It's a review engagement. You just inquire stuff or you just analyze stuff, right? That's what you basically do. So inquire, analyze, all that is what we do. Okay. Then what else is there in cash flow forecast? They can even ask you for the evidences. Okay, so you can write same way you like write procedures, you'll write the evidences as well. Then that's it. So they can just ask you these things from cash flow forecast. Usually the procedures and evidences and going concern problems being faced. Then you can find other assignment, like you can find something, yes, obtain is also there. You can write obtain as well. Discussion is also there. Inquiry management, all that is there. Then the second other assignment is due diligence. What is due diligence? So basically you're talking about, you are looking at a potential target company. So should you accept the potential target company, or should you buy that company or not? So that is what you're looking at, right? So due diligence is when, as an auditor, we see whether we want to buy that company or not. So for that, they might ask you the things that you should look at in that company. So they might ask you what problems are faced, what problems you think are faced by the potential target company, right? Then whether you should accept the due diligence engagement or not. Maybe you are currently the auditor of your client who wants to appoint you as the due diligence reviewer, or maybe you are also the auditor of the potential target company. So there can be certain conflict of interest issues, right? So that can be existing in that scenario where you are the auditor of the acquirer as well as the acquiree. So there you have to maintain your confidentiality on the both sides. Then in the due diligence, they might again ask you about certain procedures that you might perform, right, in that particular situation to see or to value the net assets of the potential target company. Correct? Then another other assignment that you have is fraud. So in fraud or forensic investigation, what we have most importantly is the ethics are more stringent as compared to audit. So you should know that the ethical requirements of a fraud investigator, okay, because imagine you are police, you get to know a lot of personal stuff of people. So you have more onus of confidentiality on you as compared to an auditor who's just auditing financial statements. So that is something, you're getting into the personal lives of the people, you're getting access to their mobile phones, you're investigating people. So that requires a lot of ethical extra requirements. So for fraud investigation, you should talk about ethical issues there, right? And then you can talk about when to accept the fraud investigation assignment, because you will figure out that this is a total different line of work. It is not related to financial statements. So if a company has been having a fraud in their financial statements, the investigator looks out that who was the preparator of fraud, they quantify the fraud, and they report it or prepare a report for the external agencies. So this brings in a lot of liability for the investigator as well, right? So he's doing something which is the work of maybe a policeman. So you should see whether you have that, knowledge, training, and experience to accept this engagement or not. Then again, of course, they can ask you about the procedures, right? Whether the procedures are performed or not, right? Okay. Then these are the important other assignments that we have: cash flow forecast, due diligence, and forensic investigation. Apart from that, we have other assignments as well, which are related to social, you can say, when we talk about social performance or social audit of a company, but this is something that you are supposed to do. Okay, so you can find such question in question number 3, and of course, it can be accompanied with review and reporting. So this can be accompanied with review and reporting. So maybe they can give you a requirement which is related to critically assess the audit report extract. So for here, you should know that what goes into an audit report. So what goes into the audit report? And how do you form your audit opinions? What are the kind of audit opinions you have? So what are the contents of audit report? So I taught you with the help of an example. So he's your friend, Mr. Taub Kora. Yes, Mr. Taub Kora. Read. Or let's keep his name Taub Kora, because read is stagnant. It remains same. So what is this? T stands for? Yes, T stands for title of the audit report. A stands for audit opinion. Okay, A stands for addressee. To whom is this report addressed to? So it is addressed to bank people or the shareholders. So you specify to whom are you addressing this. Then O stands for opinion. And whenever the opinion changes from like unmodified to modified, you will also change the heading of opinion. So if it is a qualified opinion, your heading will be qualified opinion. If the opinion is adverse, your heading will be adverse opinion. If the opinion is disclaimer of opinion, your heading will be disclaimer of opinion. Then you have basis for opinion paragraph. So what do you explain in basis for opinion paragraph? You basically tell them that why have you given a modified opinion? What was the reason for basis for opinion paragraph? Was it related to a certain misstatement? You need to talk about that. Was it related to any other stuff? You need to talk about that. So basis for opinion paragraph, right? Then you have CAM paragraph. What is CAM paragraph? It is key audit matter. So you have a proper ISA which tells you what goes into CAM. Okay. So if I tell you what goes into CAM, let's discuss that as well. Okay. So let us see what goes into the CAM paragraph. Okay. Yeah. So let's write this question here. What is CAM? And why it exists? Yeah. So first of all, you are supposed to tell them that there are certain matters which are communicated to TCWG. So to know CAM, you should know what is communicated to TCWG. So the question is, what matters? It's a direct question. What matters are communicated to TCWG? What matters are communicated to TCWG? So we communicate auditor's responsibility to those charged with governance. Yes, we communicate the planned scope, timing, and direction of the audit. Then we also communicate to TCWG significant findings from the audit. Significant findings from the audit, anything that you found from audit. And you also communicate auditor's independence. So any issue during or any event during the audit which led to breach of auditor's independence, we also mention that to TCWG. So these are the few things that we mention to TCWG. Out of this, and of course, there are also internal control deficiencies. We also give them a proper schedule of misstatements, right? Schedule of misstatements. So these are the things that you communicate to TCWG. Now, out of these things, what you find as of utmost importance, right? So whatever you've communicated to TCWG, something that you consider which has highest risk, yes, which is based upon auditor's judgment, or something which is of highest importance during the process of audit, which was correctly dealt. So, for example, during the process of audit, there was an area of key judgment. You made a key judgment or you made a key estimate, which was correctly dealt. I'm not saying it's misstated. I'm not saying it is materially misstated. It is just a material thing which is correctly stated in the financial statements, but I still believe that it is a key audit matter. So anything that I communicated to TCWG, from that, I decide what are the utmost important points, and that are reported as key audit matters, right? Now, what do you report in CAM? You tell them which matter is identified, as CAM, and why. Why exactly is this CAM? Which matter plus why. This is what you have to report, right? In CAM paragraph. So this CAM exists for all the companies here in the audit report. Then you have other information paragraph. What is this other information paragraph? In all the financial statements, there is a proper annual report. So information in annual report, apart from financial statements. So, for example, auditors are looking at CEO statement, CFO statement, director statement, chairman statement. So, if anything is misstated in their statement, I'm not talking about financial statement, balance sheet, or P&L, but something which is misstated qualitatively in the media things that they've communicated, any articles that they've published, that is other information. So if there is no misstatement, I keep the other information paragraph here. But if there is by chance any misstatement, then what I do, I take this other information paragraph from here to here. So from after CAM, I take it to after basis for opinion. So if it is not misstated, it is kept here. But if it is misstated, it is kept here. If it is misstated, if the other information is misstated, it is kept here, right? Then we have responsibilities of the management and auditor's responsibility. So that is again not important. So what happens is, this is the content of my audit report. Whenever my report is modified, what is modification of report? Whenever the name of your friend changes. Yes. So for example, the name of your friend is Taub Kora, original name. The other information paragraph was shifted from here to here. So name of your friend will be Tao O Kra. So the name of your friend has changed. So I say this is a modified report. So my heading will be modified report, right? And then if your opinion is modified, let us understand the different opinions that we have, the different audit opinions that you can give as an auditor. Let us understand them. What are the different audit opinions? So for that, you need to understand what do you mean by pervasive. So the misstatement can be material. You all know materiality, that is based upon thresholds of revenue, total assets, and PBT. But there is something known as pervasive as well. So misstatement can be material as well as pervasive. What is pervasive? Pervasive is that it is highly material, like more than 60% of the account balance, or it is widespread in the financial statements, or something, or account disclosure, which is fundamental to users' understanding. Fundamental to users' understanding is misstated. So if any these three things exist, we say that the misstatement is pervasive, right? So when my misstatement is material, not pervasive, what kind of audit opinion is given? Qualified audit opinion is given. But when my misstatement is material as well as pervasive, then adverse audit opinion is given. But when we are not able to get a proper, information related to our financial statements, so let's suppose one account balance information is unavailable. So it was a material thing, material information unavailable. So there you're going to give qualified opinion. Okay. And if the information that is not available is material and it is widespread as well, so pervasive, so there you will give disclaimer of opinion. So if the let's suppose the whole set of financial statements or bookkeeping, whatever we did, has been burnt in fire, so that is a pervasive thing, that is a widespread thing, a lot of information is unavailable. So in that case, I'll give disclaimer of opinion, otherwise I'll give qualified opinion. And whenever I give any modified opinion, the heading changes from opinion, it changes to the type of opinion. So you say, let's suppose it's qualified opinion, so your heading will be qualified opinion, then your basis for opinion will be basis for qualified opinion. So if that happens, the name of your friend again changes, right? So the name of the friend will now become, the name of the friend will be TAQB, basis for qualified opinion, then Cora. So again, the name changes. Whenever the name changes, the report is modified, right? Then we also have few more paragraphs. See, we are revising it. So I hope you guys know it once. We're just revising this. We have another paragraphs which might get added into the audit report. Which paragraphs can be added apart from what we have discussed? Number 1, MURGC paragraph. Number 2, emphasis of matter paragraph or other matter paragraph. What is MURGC paragraph? For that, you need to understand the, concept of going concern. So let's discuss that. I'm going to annotate it. Okay. I'll not erase it. So you will have it in your notes. So in MURGC, let's understand first of all, if there's a going concern problem. Yes. If there is a going concern problem, there are two situations. One is that you are no more a going concern. Second is there is an uncertainty regarding going concern. So one is you are no more a going concern, another is there is an uncertainty regarding going concern. If you are no more a going concern, what you are supposed to do? As per IAS, that is IFRS, you are supposed to prepare your financial statements on breakup value basis. That's the first thing. And you are supposed to disclose that, yes, we are no more a going concern and we have made our financial statements on breakup value basis. Now, what if you have correctly done this accounting treatment? And what if you have not correctly done this accounting treatment? See, if you have correctly done this accounting treatment, if the management has correctly accounted for it, then I will not modify my audit opinion. But this is an important disclosure. Okay. So auditor will draw the user's attention to this important disclosure, which is correctly made through emphasis of matter paragraph. So the auditor will include emphasis of matter paragraph in the audit report, and he will say, or he will draw the user's attention to this correctly disclosed disclosure, right? But if it is not correctly accounted for, what if this is not correctly accounted for? Then first of all, the auditor will issue it's a pervasive misstatement, so adverse opinion will be issued. Okay. And you will also modify your report. This will also modify your report. So this is a adverse audit opinion which will also modify your report, and an inclusion of emphasis of matter paragraph will also modify your report, because whenever the name of your friend changes, the report is modified. So emphasis of matter will add to Taub Kora, so the name of the friend will change and the report will be modified. So this is when we are no more a going concern. What if We are still a going concern, but there is an uncertainty regarding going concern. As per IFRS, whenever there is uncertainty, you are just simply supposed to disclose that uncertainty. Now, there are two situations. You have disclosed it or you have not disclosed it. If you have correctly disclosed it, you will draw the user's attention to the disclosure via MURGC paragraph in the audit report. So this is material uncertainty regarding going concern. So this is a positive paragraph, MURGC, and this emphasis of matter is also positive paragraph. Something which was correctly disclosed, we are just drawing the user's attention to it. So MURGC paragraph will be introduced. But what if we have not correctly disclosed it? Then we will issue a qualified audit opinion, which will also modify the report. So this is what happens when there is a going concern problem, and that gives rise to MURGC paragraph in the situation when there is uncertainty regarding going concern that is actually correctly disclosed in the financial statements, but we are just drawing the user's attention to that correctly disclosed disclosure note. Are we guys clear on this? MURGC? Yes. Okay. Awesome. And now you understand emphasis of matter paragraph as well. So anything that is correctly disclosed, you draw the user's attention to it. That is emphasis of matter paragraph. Now, what in the world do I mean by other matter paragraph? That is the question. What do I mean by other matter paragraph? This is a very important concept that I just explained you. If you were not able to grasp it in one go, maybe you've not done this correctly. Just this is a live session. You can just, move backwards in the session. So just listen to that part again. When I draw this table, just listen to that part again. Okay. Now, what is other matter paragraph? Other matter paragraph is any extra information that you want to talk about in the audit report. So something like previous year's financial statements were not audited. Previous year's financial statements were not audited at all. Now, this is not any information which is correctly or incorrectly disclosed. We are just talking about something general, just like, you are doing your mock, and then after your mock, you call me and say, ma'am, I did this mock when I was not keeping well. So keep that in mind. So just like that, we are just telling them other matter which we want to talk about in the audit report. For example, previous year's financial statements were not audited. Okay. So that is it. Now, where are these paragraphs placed? That's the question. So if I am making a report which is having all these paragraphs, so where will these paragraphs be placed? So title, addressee, opinion, basis for opinion. After that, you have MURGC paragraph. Okay, if you need to include MURGC, that's where it comes. Then if you have CAM paragraph, other information paragraph, then you have the emphasis of matter paragraph and other matter paragraph. Okay, and then you have your responsibilities of the management and responsibilities of the auditor. So this is what it looks like. These are the placements of your paragraphs. So MURGC is placed after basis for opinion, and emphasis of matter is placed after CAM. Other matter paragraph is also placed after CAM. Right? So in your question number 3, you might be asked something about the audit report where they have given incorrect opinion. So you will mention this is wrong opinion. They have misplaced a paragraph, something that should have been gone into emphasis of matter. Maybe they've taken it to CAM or vice versa. Or something that was a misstatement, they have classified it in MURGC. So that type of wrong things would be done in the audit report, and you will point them out and say that this is wrong. Correct? So this is what basically we have in review and reporting of our audit. Are we all clear? Yes. So this is basically the question number 3, which can ask you something from review and reporting. So now we will take a small break of 5 to 7 minutes. Yes. And then we will start with few direct theory questions. And then finally, I'll talk about the important concept of sustainability. Now that sustainability is basically related to audit. You've done sustainable reporting in IFRS, but we also have sustainable reporting audit done. So we have a technical article on it, which we will read out, right? So let's take a break of 10 minutes. Yeah. And after that, we will get back with direct theory questions and we will do the sustainability topic. So, meanwhile, if you want to revise what we just discussed, the reporting part, you can just go back. It's a live session. You can take the cursor back and re-watch the reporting part that we've already discussed. Yes, clear to all? Let's meet you after 10 minutes break. Okay, guys, I hope I'm audible to all of you. Let's resume with our session. I hope you have had a good break. Let us do some important direct theory questions, okay? So the first direct theory questions that I'm going to take up is the no-collar, okay? So let's discuss no-collar. So this one is basically non-compliance with laws and regulations. So what I'm going to first talk about is the auditor's responsibility. The question number one is auditor's responsibility for no-collar. So what is no-collar? It is non-compliance with laws and regulations. So what is auditor's responsibility for a client's no-collar? You need to understand the primary responsibility for compliance with laws and regulation is with management. So that's what we would first write, that it is the management's responsibility. It is the management's responsibility for compliance with laws and regulations, right? So it's the management's responsibility to comply with all the laws and regulations. Then what is the auditor responsible for? The auditor is responsible for compliance with laws and regulation, only the ones which are related to financial statements. So that's what auditor is responsible for. So what auditor does for understanding the no-collar is that first he, as per ISA 315, the auditor will first understand the client. So the auditor will first do the pestle analysis of the client, that okay, pestle means that he will check what is the political environment of the client, the environment in which it is working in, what is the economic environment, social environment, technical one, then again the ecological environment and the legal environment. So in the pestle analysis, when he checks out the legal environment, that is basically the laws and regulations that he's checking into. So the auditor is supposed to first understand the laws the client is having. Then fourth thing is that if a no-collar, by chance, if a no-collar is identified or is suspected, okay, so you have identified a no-collar or you suspect a no-collar, any of these two things, what are you supposed to do as an auditor? You are supposed to gather evidence, okay? You're supposed to gather evidence for that, that if you suspect any no-collar or you've identified any no-collar as an auditor, you're supposed to gather evidence regarding what? Regarding the nature of the no-collar and the circumstances in which this no-collar took place. So what was the nature of the non-compliance and under what circumstances this happened? And how does it impact? How does it impact the financial statements? So that is also what you're supposed to check. So whenever you see any no-collar happening, that's what you have to surely do, right? So you have to see as an auditor that what was the nature of the no-collar and the circumstance and how does that impact the financial statements. Now, once the auditor has figured out that yes, there was a no-collar, the auditor is supposed to report it. If there's a non-compliance with laws and regulations, the auditor has to report it. Number one, the auditor reports it to the TCWG, that is those charged with governance. Number two, the auditor can report it to third parties also if it is required by law or is it in public interest. So for that, the auditor can actually, take legal advice. So for that, auditor can actually take the legal advice that should I disclose this no-collar to a third party or not, because that is a breach of confidentiality. So basically, any law and regulation which directly impacts the financial statements. So what auditor has to do for that? So any, compliance or any laws and regulations which directly impact the financial statements, as auditor responsibility, the auditor is supposed to collect sufficient and appropriate audit evidence for that part. So if some law is there which is directly impacting the financial statement, it is auditor's primary responsibility. I'm not saying his responsibility is to comply with the laws and regulations, but it is his primary responsibility to collect the audit evidence that yes, it has been complied with or it has not been complied with. So that's what auditor has to do. But if any laws and regulations which indirectly impact the financial statements, for that the auditor, he is to just maintain professional skepticism. Okay, he is to just maintain professional skepticism. He should be maybe doing certain inquiries and certain correspondence, and that's it. So he will not actually collect any evidence, but he will just maintain skepticism for its compliance. That's in general. So if as an auditor, you're not supposed to be complying with laws and regulations, but if the client is meeting those laws and regulations or not, for that you have to be skeptical, right? That's what is the auditor's responsibilities for NOCLAR. Now, the second important direct theory question which comes next after this is, what are the auditor's responsibility for fraud? Auditor's responsibility for fraud. Yeah. So what is the auditor's responsibility for fraud? Let's discuss that. So fraud is of two types. One is fraudulent reporting. Yeah. Fraudulent reporting. Fraudulent reporting is basically you've passed an incorrect journal entry or you have done any kind of window dressing. Yes, that is fraudulent reporting. You have included bogus entries, ghost employees, all that stuff. Then second type of fraud is misappropriation of assets. So basically what happens here is something which was meant for use in the corporate, you've started using it for personal reasons, or you're trying to steal the assets. So that's what companies can be doing, or that might be happening with the companies as a part of the fraud. So what are the auditor's responsibilities for the fraud? Auditor does not again have a primary responsibility for the detection or prevention of the fraud. So who has the primary responsibility? It is the management, who's primarily responsible for prevention and detection of fraud, right? So that's what the responsibility of the auditor is, management is. But if you talk about the auditor will not be able to figure out the fraud, because if you see, fraud is something which has a nature of concealing. So it is always concealed by the preparator. If someone has done a fraud, he would never actually leave any trail of evidence that someone is able to identify as fraud. He'll always try to hide the fraud. So fraud is of a nature which is concealed, right? And also any evidence that is collected for fraud is persuasive in nature and not conclusive. So what is persuasive? Persuasive is something which is leading to certain like kind of persuasive means that you are trying to not giving a conclusion, but you're just saying, okay, it might suggest. So it's not a proper evidence which is guaranteeing something. It is just that, okay, this might be the preparator, or that might be the preparator, or this might be the fraud quantification, or that might be the fraud quantification. But there is no conclusion who actually committed the fraud. Was there an actual fraud or not? So there's no conclusion there. So it is always in the gray. So auditor will not be able to figure out. It's the nature of fraud is such that the auditor will have difficulties in identifying the fraud, because anyone who's done the fraud must have done 100 different things to hide the fraud, right? So it's persuasive in nature and not conclusive. So also auditor use sampling techniques. So it is difficult for him to figure out fraud. So he might not be able to detect 100% of the misstatements, because he's not checking 100% of the account balances, right? So what is the auditor's responsibility of fraud in that case? The auditor is just supposed to be professionally skeptical. Yes. So he has to maintain his skepticism, professional skepticism, in case he detects or he has any suspicion of fraud. Okay. So that's what he has to do. And now, auditor might be held liable for the fraud if the fraud has happened because he lacked his duty of care. Yes. So anyone in future can actually sue the auditor that, this fraud happened with this company and you did not tell us about it. Only if the auditor was not able to detect the fraud because of his lack or his negligence. That has to be proved that it was the negligence on part of the auditor. That is why the fraud did not come in front of us, right? That is shareholders. But nobody can actually prove that in, most of the circumstances. So that's what we can write in the fraud, you can say, responsibilities. So all in all, auditors will be held responsible for the fraud only if it happens because of their lack of duty of care. That means they did not do the audit properly. They did a bad quality audit, which is why the audit did not detect the fraud. Right? So that's our way of writing the answer. So I'm just giving you the key points of it. You can elaborate on them further. Then question number 3 that can be asked, direct theory question. How to limit auditors' responsibility or liability. So what are the ways through which you can limit auditor's liability? Someone can sue the auditor because he's signing the audit report. So how can you actually limit that liability? So number 1 is that you should have proper acceptance procedures. So whomsoever you are accepting as your client, first of all, that client should be having a clear chit, clean chit. That person should not be lacking integrity or should not be involved in money laundering or any illegal stuff, so that in future you reduce the risk of any liability coming on you, right, as an auditor. So prevention is better than cure. So prevent taking up such clients who might have any risky backgrounds. Like politically exposed person is what you can avoid. Then properly maintain the documentation. At least for 5 years, maintain the documentation of the work that you've done, so that in future, if there's any investigation against you as an auditor, you have proper evidence with you that you did your work, still this happened. Then you can have a disclaimer of liability. That means in your audit report, you can disclaim your liability that this audit report is just made for bankers or just made for these stakeholders. We don't mean to issue it to the public. So anyone out of the public then will not have the power to file a case against you, because you made it clear in the audit report that this audit report is just for the bank or it's just for the current shareholders. So a potential shareholder then won't be able to sue you. So you are disclaiming your liability. Then you can also cap the financial loss. So you can mention in the audit report or the engagement letter that, if something happens in the future, we will only have this much loss, which can be a multiple of the audit fee. So only 2 times the audit fee, 5 times the audit fee, and not the whole of our wealth that has to be taken away. Then make sure that you have an audit firm which is a limited liability partnership, so that your personal assets are not attacked because you did have a case against you against the audit firm. So audit firm is a different entity, and the limited liability partnership is a separate legal entity. So there should be no case against the auditor if there's a case against the LLP, right? So that's what you can mention. Then make sure you use the engagement letter. Yes. So engagement letter is something which sets out the responsibilities of the auditor and what scope of work he has. So in the engagement letter, it should be clearly mentioned that we are not the one responsible for fraud or for laws and regulations. That's the primary responsibility of the management. We're just supposed to be skeptical about it. And if we find it, we'll surely report it to TCWG. So that engagement letter acts as a contract in case you have a case against you, you will have a contract of reference, right? And lastly, do a quality audit so that nothing happens in future and you don't have to face any court cases against you, right? So these are the things that you can take into account as your, of course, the uh, ways to limit your liability. Are we guys clear till here? Can I get a quick yes or no in the chat box? Are we clear with the information on the uh, limitation or how to limit the auditor's liability? Yes. Are we guys clear? Okay, that's great. Crystal clear. Let's move on to the next direct question, which is related to how to rely on the work of others. So one thing is how to rely on work of component auditor. So component auditor is the concept of group audit. So how do you rely on the work of a component auditor? So first of all, you have to see whether the component is significant or not. So for that, you can actually see whether it is, the revenue of the component is 10% of the total revenue or not. Same with its PBT and same with its assets. So you can decide whether the component, the ratio is 15%, not 10%. So you can see whether it is significant or not. Then it can also be significant by nature as well. Sometimes a component is significant because we are using its production units, or it is a strategic unit because in future there is some thing that we are expecting from it. So it can be significant by nature as well, right? Then if it is a significant component, what work are you supposed to do? See, if it is significant, if it is significant, what kind of work do you do on the component? You conduct its full audit. As group auditor, you conduct the full audit either on the financial statements of the component because it's significant, or you know that it's a significant component and it has certain risk of material misstatement. So you can do some specific audit procedures on risk of material misstatement. So that's what we can do. Or we can audit of specific account, balance, transaction, or disclosure, right? So we can audit specific account balances if we know that it is a significant component and someone else is auditing this component. We can either say, okay, we don't want to rely on your work, we'll do the full audit ourselves, or we know that there is some risk of material misstatements, so we can just do audit of those ROMMs, or we can do audit of specific account balance, transaction, or disclosure, and not full financial statements. Now, how do you rely on the work of the component auditor? So for the component auditor, you check what is the competence of that component auditor, what is their knowledge, training, and experience, whether they have code of ethics or not, whether they comply, are they ACCA members? If yes, they would be complying with code of ethics. Then that's okay. Then are these people independent? Like, they're not having any threats, ethical threats. What are the internal controls of that particular, component auditor? How are they doing the audit? Then what quality control measures do they take? What quality control measures do they take is also mattering to us. So this is what we keep in mind before we rely on the work of the component auditor. Then another direct theory question is, How do you rely on the work of reliance on work of internal auditor? Now that is quite similar to the above points. How do you rely on the work of internal auditor? See, you need to check the status of the internal auditor. So you need to check the status of auditor in the organization. Like, is he under the CEO? So if he is under the CEO, he will never try to go against the CEO, the internal auditor. So we cannot rely on his work because then he's not independent. So we need to see his independence. If he's reporting to TCWG, then it is fine. Then it is like us only. But if he is working under the CEO or the board of directors, then it is difficult. Then we have to see the approach of the internal auditor, like how he has approached the financial statements and what quality control measures he has taken. And of course, we can check his competence as well and whether he complies with the code of ethics or not. So these are the things we can check for the internal auditor before placing any reliance on his work. Similarly, how are we supposed to rely on the work of service organization? So question 6, how do you rely on the work of service organization? So what is a service organization basically? So some clients, they outsource their work like payroll. So we are getting payroll services from outside. Now auditor needs the payroll figure, but that figure is coming from another entity which the auditor cannot actually directly audit. So we might have to rely on their work. So we need to first ascertain that what is the materiality of outsourced, function. Okay, so whatever you've outsourced, what is the materiality? Can I access them? Like, what is the accessibility? Can I go and have some checks on the outsourced firm? Then we need to see what are the control risks. So that particular firm to whom we've given our work, what are their control risks? For that, I can take two types of report. One is type 1. Type 1 is when I just talk about design and implementation. When I just talk about design and implementation of the internal controls in the outsourced firm. Or I can get type 2 report, where I just don't get to know about design and implementation, but I also get to know about its operating effectiveness, right? Whether it is effectively operating or not. So these are the things that I look at, before I rely on the work of service organization. Then I also check the experience of that firm, like since how long they're doing this work and whether they're complying with certain laws and regulations or not. So these are the things that I see before I rely on the work of service organization, right? So this is what we need to understand. And then lastly, we also have one more direct question. Of course, there are more questions like contents of engagement letter, how to accept a client, but that is basic. I've left it on to you, but these are certain things that you ignore. Okay. So, and they're very important as compared to them. These are very important. There is one more basic thing that is asked widely. What is transnational audit? Yes. And what is joint audit? Okay. What is joint audit? These are the two terms. So what is transnational audit? So transnational audit is audit across nations. Yes. So transnational audit is audit across nations. That means I'm auditing the financial statements across nations. So my client is in foreign. So that is transnational audit. So that has its own drawbacks because then you don't have the capacity to visit them, etc. Right? Then what is joint audit? Joint audit is when two auditors are auditing one client. So that has its own positives and negatives. Positive is, you are having you can say a lot of work is done by two auditors, so there's more big assurance given that yes, and the cross checking of work is there. Something that was missed by auditor 1 is identified by auditor 2. But the negative is time, resource, money is going, and there can be conflicts between the two auditors, and then we don't have anyone to actually resolve that, right? So these are the things which might be there as a negative of joint audit. Correct? I hope we all are clear till here. Yes. Yes. Are we guys clear till here? All of us? Okay. So I hope we are clear till here. Let's move on to the next topic, which is related to sustainable reporting, right? So for that, we will have to read the technical article on sustainable reporting. So first of all, we all must know that yes, we have the proper standards on sustainable reporting now. In SBR also they are tested, that is IFRS S1 and IFRS S2. Okay, now these standards, they are coming from a new perspective, because now we in S1 we talk about just the the issues which are not related to climate, so sustainable reporting excluding climate. In S2 we talk about climate related events as well. So what all things we should disclose, that is IFRS S1 and S2. Now, what is sustainability? What is the objective of sustainability? We should know that. So, just a proper definition of sustainability. So, you use the resources in such a way that the resources are available now and also for the future, right? Not just for now, but also for the future. So that is basically our, sustainability concept. Based upon that, we have started making proper sustainable reports where we give 6 types of capital. We talk about the, human resources, physical resources, manufactured resources, ecological resources. So we tell what is the impact of that particular business on the environment and the society. So we have started preparing proper sustainable reports. Now, what is its linkage with the audit is the question. So now auditors are also supposed to audit such sustainable reports. Okay. So the auditors are also supposed to audit the sustainable reports. So what is the objective, or what is the ISA which is made for the audit of sustainable report? It is ISSA. So ISA on sustainable reporting 5000. And this is yet an exposure draft. It is not finalized. It is still an exposure draft where we have rules that how the auditor is going to audit sustainable reports. Okay. So what is the objective, first of all, for auditors in this standard of or exposure draft? First objective is to check if the sustainable report prepared by the accountants is true and fair or not. So you're supposed to check whether the sustainable reports are true and fair or not, and then to give report to the users that which will have a reasonable assurance or limited assurance. Now I cannot say it will just have reasonable or just limited. It depends upon that particular engagement. If the sustainable information is quite verifiable, I can give a reasonable assurance after all the verifications. But if something is very vague, qualitative in the sustainable report, then I might have to give limited assurance only, right? So That is what we do. Okay. And for the limited assurance, we give negative wording that nothing was found which was not true and fair. Okay. So that's our objective number two. Third is to communicate. So what is the objective of the ISA? To communicate with the users that, whether what you feel is this sustainable report quite true or not, or it is totally wrong, and what is the usage of this sustainable report. So even the auditor can communicate to the users that what he feels about this sustainable report that was made by the management. Now, what is important in this particular concept is materiality. So there is a concept of double materiality. When the auditor is looking at the sustainable report and he's finding the materiality, there are two types of materiality. One is by nature, okay? Another is by amount. So it's bifurcated or it is double materiality. So when I say nature and amount, I would say this means the materiality is bifurcated between the two. But when I say that there are two types of materiality, that is double materiality. So what is the double materiality? Auditor has to see from the perspective of, from the two perspectives. How does that particular thing impacts the organization, plus how that particular thing impacts the outside world. So when I talk about financial statements, I always see what is the impact on the financial statements. That means the organization. I never think about if I do a mistake in the financial statements, what would be the impact on the investor? No, I do not count that. But in sustainable report, we see two materialities. How that particular misstatement of qualitative information is material to organization and how it is material to outside world, right? So this is the concept of double materiality. So what we do in this case of auditing the financial statements, we do planning meeting, right? Whenever we do external audit of financial statements, we conduct planning, we find audit risk, the risk of material misstatement, then we do, procedures, then we collect evidence, and then we finally do the review and reporting part. Same is the case with sustainable reports. You don't do anything extra or less, but there are certain challenges. So in there is a planning stage of this audit as well, where you use double materiality and you decide what are the risky areas, okay, in that particular sustainable report. So for example, they've said that we have increased the recycling process by 10%. So maybe they're using plastic in their the company is using plastic, and they've stated in their sustainable report that now we are recycling 10% more as compared to the last year. That's what they're claiming. So I will say it is material, because it is material by nature, because 10% is a huge jump. And if I talk about the amount also, it's immaterial, and it is material not just to the organization but to the environment as well, because plastic is a very hazardous product. So this is a risky area that I've identified. So the risk is that they might be lying. They might have overstated it or greenwashed it. So to work on this risky area, I will conduct certain procedures, or I will collect certain evidences, right? Now these procedures or evidences that I have to collect, these are subjective, okay? Because this is a qualitative thing. How will you get to know whether the recycling process has increased or not? Maybe they're just lying, and so it is dependent on subjectivity. Maybe they're saying we've started donating 10% of our proceeds, or maybe they're stating that our carbon house gases have reduced, CO2 emissions have reduced by 10%. So again, there's a subjectivity involved, there is a judgment involved, right? And it is going to involve relativity as well. Everything is going to vary from person to person because it is a qualitative thing. Maybe they say our employees happiness index has increased by 10, or our employees are happier as compared to previous year. So now that is a qualitative thing, it's a subjective thing, judgment based thing, right? So I don't know about it. So what will happen is, it is difficult in such a situation, it is difficult to obtain sufficient and appropriate audit evidence. That's the first thing that we can say. So what we can in such a situation say is, because procedures and evidences will remain the same. So for example, in cash flow forecast, you were writing your procedures, same way for sustainable report, you will write your procedures. So in the very recent past, which you will see for December 2024, they have asked this. And because they've asked it in December 24, it is less likely that they would ask it in March. But still, it can be there. So do see that question once. I think it's there in your Super 20 questions as well. We briefly discussed it during our Super 20 classes. So with this concept, you can actually look at that question again, that they were asking you what are the issues you identify in this sustainable report. So you can say that, this area involves subjectivity. It is difficult to find an evidence about this area, right? Then because there is so much difficulty to obtain sufficient and appropriate audit evidence, usually we give limited assurance. So limited assurance is when we use negative wordings. So in reasonable assurance, we use positive wording. In limited, we use negative wording, that nothing was found. We start the opinion as nothing was found, which shows that there's anything wrong, right? So that is limited assurance, right? And then we can also talk about auditors' ethics in this case. Auditors' ethics in this case. So, auditor can also be, we can say auditor can actually jingle up with the client just because they want to greenwash. So because anyway, auditor does not have a fear of getting caught in this situation, because it's not a fact. Again, so auditor can anyway dodge the bullet by saying that, I was not able to figure it out because it involved a lot of subjectivity. So auditor can actually collude with the client to greenwash the report and show that the client is very good in environmental things, society things, he's doing great things for the world. But that is where he requires a lot of ethics in this situation. So your ethical requirements for sustainable report are higher, right? Because you are working for world at large. You're not just talking about certain shareholders or banks or something. You're talking about world. So every business in some way is impacting the world. If I talk about manufacturing units or some retail products or certain food products, they're impacting the world at large and not just the shareholders of that business or stakeholders of that business. So yes, we are supposed to pay good attention to it. So it is subject to a lot of manipulation. So something which is subject to manipulation, we need to be more strict toward its ethics. And that's why the auditor has a way out, because he'll be able to dodge the bullet, because there will be no one to question the auditor. There will be no one to question the auditor. So auditor can easily collude. So to avoid that collusion, the auditor should maintain his ethics in that situation. So that is what we have in ISA 5000 as of now, which talks about double materiality, and it just talks about how risky it is and how subjective it is to collect evidences for sustainable reports. So maybe we need proper, further clarifications on how auditors should audit sustainable reports, because currently we do not have any such thing. There's just an exposure draft on that, right? So this is what we have with regards to sustainability. So what you can do is, after understanding this briefly with me here in the session, you can just try to read the technical article. Okay, you can just try to read the technical article on sustainability assurance. So you can just read it out, sustainability assurance. No need to practice a question related to it. If you have already done Super 20, there's one Super 20 question in the September-December 2024 paper. That is the question number 3 of that paper. Only two requirements. One is direct question. Second one is application based. So you can just try that question on this area of your syllabus. Yeah. I wanted to do that question today, but we're running short of time. So this is what I leave it on to you. It's optional if you want to, because anyway, They will ask you basic things out of it if they ask this topic, and just understanding the essence of this topic is enough. The double materiality concept, the fact that we give mostly the limited assurance, and auditor needs to be more ethical in such situations, and it is subject to a lot of manipulation, so it's difficult to collect appropriate evidence. So if you just know these things, you can make answers out of it easily, right? So this is one of the technical articles which is very, very important. And the second one is data analytics. So you should know basically what are the positives of data analytics and what are the negatives of data analytics. So there's a topic by the name of data analytics, which talks about big data. So you know what is big data? It is unstructured form of data which every company holds. So it's there in the storage. So whatever you Google, it's a big data. Whatever the world is Googling, it's big data. Whatever data is collected through Instagram, Facebook, WhatsApp, or whatever, YouTube also, these are all big data, which are unstructured. So these companies sell these data and structure them for the marketing purposes. That's how today, if I say I want to eat a burger, I would see an ad on burger, right? So that is how they use big data. So now, what you can be asked in the exam is what are the positives of using data analytics for audit? Okay, so positive is that your work is reduced. So basically, you can actually you know use the data analytics tool for analysis or for analytical procedures. Yes, so that will reduce your work and it will reduce mistakes, human errors, reduction of human errors. So the software will tell you the red areas or the risky areas. So risky areas which are actually risky will be correctly identified, right? And then it will help you to basically reduce the sampling risk, reduce the sampling risk. So maybe you cannot perform the work on all areas of financial statements, but you can put the whole set of financial statements into a software, and the software can run its algorithms on the whole financial statements. So your sampling risk will be reduced. Then what could be the negatives of it? The first negative is leakage of data. So data leakage, is something which is happening a lot, and this also leads to confidentiality problems for the auditors. And also the risk is that auditor might not be auditor might not be having the KTE to use such analytical tools or such computer assisted audit techniques. So that can also lead to some issues. And then of course it is a strain on the resources. So maybe the client is not big, but we are still having such huge softwares to be used on them. So these are the negatives of your data analytics, right? Again, you should just know the positives and negatives, and of course, the meaning of data analytics. This can be again a direct question asked in the exam. You can read these two technical articles, okay? So if time allows in your preparation, you can have a quick read through, just a random read through into the data analytics and the, of course, sustainable assurance. Yes? Are we guys clear till here? Can I get a confirmation from all of you? Are we all clear? Yes. That's great. So this marks the end of what I wanted to discuss with you today in the grand revision. So I will share this Word file with you. I hope you had a good time in the revision and a lot of concepts got revised, starting from your question number 1, business risk, audit procedure, evidence, quality management, talking about your ethics, then talking about your review and reporting and other assignments, then talking a little bit about your the other matter paragraph, emphasis of matter paragraph, MURGC paragraph, then talking about the direct theory questions which we have, and then finally the sustainable assurance and sustainability assurance and the data analytics. And yes, there are few more topics which are direct theory questions, which you guys can revise by yourself, like what goes into an engagement letter, what goes into a tender document, how to accept a client. So all these areas plus your IFRS knowledge, right? So IFRS is something that is happening tomorrow in the same place, same channel. You have to come tomorrow. If you have time, you're invited. Just have a look at IFRSs, so that you can use them when you write about MTR. So that T comes from treatment, that is IFRS, right? So that is it, I believe. And I think what should be your next strategy? I'm sure you guys, okay. I'm sure, yes, ISQM2 is also important, but that is just regarding, okay, I'll attach the notes of ISQM2 in the description as well for you, short notes. That is regarding who will be your external quality control reviewer. What are the qualifications? So if you just look at the quality control reviewer stuff, let me just save this document. Okay, grand revision. I've given these notes to the students of the batch. But yeah, if you just look at this, the EQR, so this is what I'll attach along. You can just have a reading. It's a small note where I've given you when to get an EQR done. So you get an external quality control review done for all listed clients, first of all, or whenever there's an unusual event, whenever there's significant judgment, complexity, or uncertainty, or it is done as a safeguard to an ethical threat, or when a company is getting listed in future, that's why the risk is high. So there you actually get an EQR done. Then who can act as an engagement quality control reviewer? He's someone who's independent. So he's not part of audit engagement team, that's for sure. He should be objective and independent. And an audit engagement partner can act as the quality control reviewer after 2 years of cooling off period. So someone who's been an engagement partner can be your, EQR reviewer only after 2 years of cooling period. Then this person should have knowledge, training, and experience of that industry, legal and professional framework, and code of ethics. So again, this person should have the KTE and he should follow certain code of ethics. Then the EQR reviewer should be a senior person whose POV is respected. So the firm's culture should be such. This will enable him to challenge the audit engagement. So, he should be a senior person so that he can challenge the engagement partner. Then responsibilities of EQR: review the judgments of the audit team, review whether the audit team has used professional skepticism throughout the audit process, to check the independence of the engagement partner, when external consultations required, whether they've been taken or not, because as per ISQM, one consultation is part of quality control, whether the evidence collected is sufficient and appropriate or not. So these are the works of engagement quality control reviewer, right? So this is what is EQR and ISQM2. Again, I'll attach this particular note along with your today's grand revision notes. Now, finally, I'll just give you a quite of the headings of the topics that you can do after today's session. Number one, tender document, engagement letter. Okay. Then revise the acceptance procedures, checking the client's integrity and all. Money laundering. So you all know what is money laundering and the process of money laundering, that is placement, layering. First of all, it is placement, then it is layering, and then integration. And then what are the ACCA's, you know, suggestions against money laundering? Appoint an MLRO, have, the documents with you, and there should be proper training to the employees that report any suspicious thing to the MLRO. And all those suggestions you can just go through from your notes, the money laundering process. And then you can just revise the IFRSs, of course, and you can just revise certain procedures based upon standards, okay, and specifically group audit you can revise. So group audit, like how do you audit group financial statements? So for that, you should know consolidation. If you would know consolidation, you can find the risk associated with consolidation. You can find or you can write the procedures related to consolidation. So these are the areas that you can revise. Now, in your exam, professional marks matter to you a lot. Again, I'll emphasize on it. So when you're writing your answers, make sure that, guys, your answers are in a logical flow. When I say logical flow, that means you're not repeating yourself. That's the point number one. Second is you are not having a half-visit answer. And always in question number one, first read the full question. Okay, read the full question before answering. Because you might find something in the last exhibit which can relate to the first requirement. So while reading the case study, you can brainstorm, but you will not fare out your answers. You'll first read the full question and then answer it, the first question, right? And the logical flow should be there. Proper format of briefing note should be there. Then you should have proper introduction and your materiality calculations and your conclusions, so all that should be really well there in your the first question. So that's how you get your professional marks. And then your analysis skill. So analysis is coming from 360-degree approach. So 360 degrees, as I said, I gave you an example of poor answer and a quality answer. So if you're writing poor answers, you will not just lose technical marks, but also professional marks. This is a bad quality audit. No. Why it is a bad quality audit? Similarly, in ethical issues also, you can write poor answers where you do not use that technique of first identifying the threat, telling why it is a threat, and then telling significance of threat, and then writing the safeguards as final way. So if you're not following the techniques, then you're not analyzing it correctly or evaluating it correctly. Similarly, for evaluation of your audit risk, you're using MPR approach and you're using the way forward approach. That means you're thinking ahead, right? It's not what ACCA just says in words, but they also expect from you. Think ahead. So if there's a fraud happening in a company, you're not just supposed to mention about that, okay, these are the responsibilities of the auditors for fraud. This can also mean it's a risk. If fraud can happen now, that means my internal controls are weak. So not just in this area, there can be many other such areas where the internal controls are weak and I need to work on them, right? So these are the things that you have to keep in mind while making your answers to get those professional marks. So maintain your speed in the exam, write good quantity of answers, okay? Like the length should be good and it should always be in paragraphs. No bullet points in AAA. It's always in paragraphs with very appropriate headings, right? Small headings and appropriate relevant headings. That's it. So going forward for the remaining days, these are the things you can revise. And I would highly recommend that 3 days before your exam, just stick. Yes, bullet points for procedures and evidences, not for anything else. 3 days before your exam, you will revise the concepts, okay? You might watch debriefs of questions, but you will not practice any question yourself, okay? So you might watch any mock debriefs or kit question debriefs, but you will not practice any question 3 days before the paper if you've already done enough practice. Before 3 days, like you will just do the concepts, okay? That's what I would highly, highly recommend to you. And so tomorrow, all these students at TG Professionals, I know you guys are also here, the people who've enrolled. You guys are going to get your TGP mock debrief, okay? That is the mock that you've written for which you've received your scripts almost, who have submitted, you guys have received your mocks. And okay, then after that, the rest of you, you can also, if you've given a mock, you should by far get your scripts and all. The second thing is pre-mock by ACCA. So I'll be solving this pre-mock. Most probably this pre-mock will be available, I believe, by 1st of March. I know it's quite late, but it will be available by 1st of March. You have the ACCA's debrief as well that you can refer to. Okay. And just let me check the calendar once. Yeah, 1st of March. So you have your paper on Monday. So on Saturday, I'll make it available. So before that, you can try the pre-mock of uh, given by ACCA, pre-mock of March 2025. And my debrief on that will be out on 1st March. So before that, you can plan that, okay, I will give this paper maybe day after tomorrow or tomorrow, whenever you want to sit for it. Go ahead, sit for the pre-mock, and by 1st March, its debrief will be available. Right? So this is what your strategy for the next days is. And again, there is a free WhatsApp group which you can be part of, and I'll paste the link in the description box, and the notes also for today will be there in the description box. So that's it, guys, and I hope best for all of you. This marks the official end of our sessions, and it was a great time for all the batch that I've taught, and also the self-study students. I hope it was a helpful session, and I hope it will help you in some way in your exam. So may God bless you all, and may you all pass with flying colors. And this might be your, the last attempt of AAA. I really hope and pray for that. So all the very best, guys. And thank you for choosing me. Thank you for being here. And thank you for showing your trust in me for your AAA paper, which is such a challenge. And if you pass this challenge, I mean, you should be proud of yourself, and I'm sure you'll pass this uh, because of the efforts that you've put in, the sessions that you're attending. That shows your effort. And I've been seeing so many comments on my channel, or even from the self-study students for audit, the way they're using IFRS recordings and IFRS grand revisions, the AAA, resources that are there on my channel. So it shows you guys are putting the efforts, and that's what matters at the end of the day. It is not the result, but it is the efforts that you put which are respected, and then you get results. So just do your best. Do not let any negative thought strike your mind at the examination time. So all the very best. You guys will be missed, and I hope you all becomes ACC affiliates very soon. So thank you and all the best to all. This session was recorded and it will be available on the channel few minutes after I end the live class. So thank you, guys, and do share your feedback on the respective groups that you are in for the session that was held today. And if it helped you at all, I'll be glad to have your feedback, maybe in the WhatsApp group that you're part of, or maybe in the comment section once the session is uploaded, because the live chat, it vanishes, right? So goodbye, all the best. Take care.